reality that all citizens must contend with for the primary reason that governments raise revenue from the people they govern to be able to function fully. In exchange for the taxes that people pay, the government promises to improve the citizens' lives through good governance. Taxation as a government mechanism to raise funds, develop, and evolve through time. Let me discuss to you the history of the Philippine taxation. First, the pre-colonial period. Ancient Filipinos practiced paying taxes for the collection from their datu. The collected tax or tribute was called buwis or handog. The chieftain's family members were enjoying exemption from paying taxes. Non-payment of taxes was already punishable during this period. The next is the Spanish era. During the 17th and 18th centuries, the Contador de Resultas served as the chief illustrious bookkeeper whose functions were comparative to the Commissioner of Internal Revenue. During these times, taxes that were collected from the occupants varied from tribute or head tax of 1 gold mace yearly, tax on value of jewelry and gold trinkets, indirect taxes on tobacco, wine, cockpits, burlas, and powder. A short time later, the so-called cedula, or what we commonly know presently as the Community Tax Certificate or the CTC, was presented as a form of obligatory tax collection that shows evidence and verification of the sovereignty of an imperial government.
American era. In 1902, the first civil government was established under William H. Taft. However, it was only amid the term of second governor, Luke E. Wright, that the Bureau of Internal Revenue was made through the passage of reorganization of Act No. 1189 dated July 2, 1904. On August 1, 1904, the BIR was formally organized and made operational under the Secretary of Finance, Henry Ide, the creator of Internal Revenue Law of 1904, with John S. Hord as the primary collector or commissioner. The first organizations began with 69 employees, which comprised of a collector, vice collector, 1 chief clerk, 1 law clerk, 1 record clerk, and 3 division chiefs. On May 1921, by virtue of Act No. 299, the real estate license, the cash divisions were cancelled and their capacity were exchanged to the city of Manila. Japanese era. At the outbreak of World War II, under the Japanese regime, the Bureau was combined with Customs Office and was headed by a Director of Customs and Internal Revenue. Post-war era. On July 4, 1946, where the Philippines gained its independence from the United States, the Bureau was inevitably re-established independently. This led to reorganizations on October 1, 1947, by virtue of Executive Order No. 94, wherein the following were undertaken. First, the accounting unit and the revenue accounts and statistical divisions were consolidated into one. Second, all the records within the record sections under the administrative divisions were solidified. And lastly, all the legal work were centralized in law division. In the post-war era, a noteworthy step undertaken by Bureau in 1958 was the foundation of the tax census divisions and the corresponding of the tax census unit for each regional office. This was done to solidify all articulations of resources, incomes, and liabilities and resident corporations within the Philippines into a national tax census.
Hi everyone, I am Marina and I am about to discuss to you the important features of the Philippine Taxation Law. A tax is a forced charge, imposition, or contribution, and as such, it operates in invitum. It is no genuine method to expose to the will or authoritative assent expressed or construed of the individual trouble. They are not contracts, either conveyed or construed, yet they are positive exhibitions of government. It is a pecuniary burden payable in money. A duty is not really bound to those payable in money. As for the situation, for instance, of back pay of testaments, which under Republic Act 304 could be utilized as installment of charges. In one case, the preeminent court held that back compensation endorsements, which under Republic Act 304 might be utilized to make good on land charges. It is assessed in accordance with some reasonable rule of apportionment. It is levied by the legislative body of the state. Taxing force is unconventionally and solely administrative in character. Tax or obligations made by the law. Conformably with the established command on progressivity of burdening framework, charges must be founded on capacity.
Forced by the state of people, property, or administration within ward. There is a common obligation created with the expense of those delinquent citizens, regardless if the non-payment thereof creates a criminal risk that could be subject for criminal arraignment under existing laws.
Hi everyone, so I'm here to report the important laws still used up to this day or further developed for continued use. So the first law is the Republic Act number 10653, which is an act adjusting the 13th month pay and other benefits ceiling excluded from the computation of gross income for purposes of income taxation. Amending for the purpose Section 32B, Chapter 6 of the National Internal Revenue Code of 1997. So what is 13-month pay? 13th-month pay is equivalent to 1/12 of an employee's basic annual salary, and it is given to the employers not later than December 24 every year. So the next law is Republic Act number 8424, Tax Reform Act of 1997, Chapter 1, Title 4, Section 106. Value-added tax on sale of goods or properties. It states the law regarding rate and base of tax with VAT of 10% of the gross selling price, with rules of transactions deemed sale, changes in status if VAT registered person, and determination of tax. So as you noticed, when we buy our product, you'll see at the receipt an amount of the value-added tax to the item or food. So basically, we pay our taxes by just buying items or paying the bill. So next is the Republic Act number 8424, Tax Reform Act of 1997, Chapter 1, Title 10, Section 248. Civil penalties when such person or corporations failed to file and pay the tax. They are required to pay a penalty equivalent to 25% of the amount due. So we must pay our taxes because it is the money of the people used to improve the country's facilities, infrastructure, and for the people as well. We pay our taxes for the better future of the country, yet people still fail to pay their tax due to the need in money.
So for my report, I'll be tackling about important taxation laws still used up to this day or further developed for continued use. The first law is in Republic Act 8424, also known as Tax Reform Act of 1997, in Section 105, Persons Liable of VAT. It discussed that any citizen in the course of business or imports goods shall be including value-added tax to their products. What is value-added tax, or VAT as we call it? It is consumption tax that is placed on each product whenever such value is added. The next law is under compliance requirements, Chapter 1, Section 232, Keeping of Books of Account. It is required by law that all companies, corporations, or any person that pays internal revenue taxes to keep journals, ledgers, or other books that will be categorized, and it includes the summarization of business transactions, journal entries of account of ending balances, record their cash sales, cash payments, sales on credit, and purchases on credit. And for the third law, on Title 6, Chapter 4, Excise Tax on Tobacco Products. This law is still included under Republic Act 8424, or the Tax Reform Act of 1997. It states that there shall be tax collected 75 centavos each kilogram of product of tobacco. However, last 2018, a new Republic Act was implemented. This is the Republic Act 11346, an act increasing the excise tax on tobacco products, heated tobacco products, and other vapor products. And it was effective January 1st, 2020, as having higher taxes on cigarettes, stated by the Department of Health, it could discourage the people with smoking habits to stop, since buying tobacco products would be a bit pricey since the tax was increased.
Train law was created to make the Philippines tax system fairer, simpler, and efficient to create jobs, fight poverty, and promote investments. It aims to raise revenues that will fund the Build, Build, Build program of the Duterte administration. So here are the strengths of the Philippine taxation laws. So first, under the personal income tax, the first 250,000 pesos annual taxable income of taxpayers are exempted. From the new tax schedule, it reduces the number of tax brackets from 7 to 6. It also imposes a 20% final tax on PCSO and lotto winnings exceeding 10,000 pesos. There is a separate schedule for people whose gross sale and other income do not exceed the VAT threshold of 3 million pesos. Second, it simplifies the estate tax rate ranging from 5 to 20% to a single rate of 6% based on the value of net estate. It also simplifies the donor's tax rate ranging from 2 to 15% to a single rate of 6% of total gifts exceeding 250,000 pesos. And the third, upon the implementation and establishment of the VAT refund system, it will remove foreign currency denominated sales from VAT zero rating and subject to the agents and exporters. And fourth, there will be an excise tax on automobiles, petroleum products, sweetened beverages, cigarettes or tobacco, and mineral products. And the fifth, there are tax administration reforms such as the fuel marking, the registry of petroleum manufacturers and importers, tax incentive reports, income tax returns, VAT refund centers, zonal values, sweetened beverages, audit threshold, electronic sale reporting system, and electronic receipts.
The Philippine taxation laws are not perfectly crafted, so here we gathered 5 of its downsides. First, let's focus on the train law. It actually caused the prices of essential goods to increase due to the petroleum products excise, and for this reason, the purchasing power of the poor is much more minimized. Second, the train law also left a negative impact on the income of small-scale business owners and individuals who use petroleum products. In fact, rice farmers who use fuel irrigation pumps had a 10% decrease in their income because of their doubled expenses. Third, contrary to what the train law initially claimed that it will increase the taxes of the wealthy, it rather gave a tax cut on luxury cars. Before, cars pricing 2.1 million and above had 512,000 pesos plus 60% tax rate, but now it only has 50%. Fourth, among the ASEAN countries, Philippines has the highest tax rates, and having high tax rates might discourage work, saving, innovation, and investment in our country. Lastly, tax incentives given on certain sectors like medical tourism might hinder the increment of revenues for the government. In 2017 alone, more than 500 billion pesos was overlooked. That massive amount of money could have been used to fund many projects.
So, lastly is the long-term contribution of Philippine taxation to the nation. So, taxes being the lifeblood of government should be adequate in order to finance the general requirement of growth and development of our country. With more tax collections, the government will be able to widen the scope of expenditures in development programs and projects, and it also improve the quality of basic services in our country and thus provide more economic benefits to every Filipinos. So the government collects several kind of taxes. Among them are personal income taxes and value-added tax, estate and donors tax, um, other percentage taxes, excise taxes, and documentary stamp taxes. These levies are collected on all types of revenues, except when these are explicitly exempted by the Bureau of Internal Revenue. So we made a list of 5 contributions of taxation and where do our taxes goes. So first in the list is to ensure that we receive our basic needs. So taxes answer for all government expenditures. It includes the running of those agencies that make it possible for us to access basic necessities and services. This includes water, power, roads, airports, and even metro rail transits. So when tax revenues are low, and the government limits its budget for these services, we will ultimately suffer with poor delivery of basic services. So second is to help keep us safe. So our taxes are used to pay for the salaries of military personnel and policemen. So they are the ones who keep us safe and keep peace and order in our country. Because of tax revenues, both the training and equipment of security forces are upgraded. So it put them in a better position to defend us or to keep us. Third is to keep business costs low. So when the government is able to collect enough taxes, it does not suffer a revenue shortfall, which can otherwise affect the country's economic fundamentals and prospects. When our economic fundamentals are weak because of low tax collections, investors' confidence softens, so therefore affecting the businesses' environment and raising the country's risk rating. So this in turn translates to higher interest rates, which can only make it harder for us to do business individually. And for the fourth, to help ensure a better future for our children. So our taxes pay for salaries of teachers in public schools and fund the construction of school buildings as well as the procurement of books and school supplies. Education is a great enabler and equalizer, opening up opportunities that otherwise would not exist for the poorest of the poor. By paying our taxes, we are able to educate our children and the future generation of Filipinos. Lastly is to help the poorest of the poor. So taxes fund government assistance for poorest of the poor. Taxes on alcohol and tobaccos, for instance, have been used to PhilHealth fund the state health insurance fund. So taxes also fund the conditional cash transfer program, which give for poor families a monthly allowance as long as they keep their children in school. So when government service suffers, the poorest of the poor are the hardest hit because they do not have options. So therefore, we conclude that taxation contributes to the government fund to ensure the projects for economic development, and by being the lifeblood of the government, these are used to finance basic services such as education and health, and as well as infrastructures. These are all vital to the economic growth and improvement of Filipino lives.
The policy of the taxation of the Philippines is governed by the Constitution of the Philippines and the 3 Republic Acts, which is number 1, the Article 6, Section 28 of the Constitution, and the national law, which is also known as the Republic Act number 8224, or the Tax Reform for Acceleration and Inclusion Act. And lastly, the local laws, which is the Local Government Code of the 1990s. So before we jump into our main topic, let us know first who pays the taxes. So according to the Tax Reform Act of 1997, these following duties has to pay taxes in our country. The first one is the citizen of the Philippines. We also have the non-resident citizen and the overseas contract workers, including the alien individual, which is whether it is a non-resident or the residents. The domestic corporation and the foreign corporation is being taxed when the income is derived within the Philippines. including their 13-month fee and other benefits amounting 90,000 are likewise tax exempt. However, the Bureau of Internal Revenue exempts some individuals from filing their personal income tax. It is the minimum wage earners, and by January 1, 2018, self-employed and the professional taxpayers whose annually taxable income of 250,000 pesos or less are exempted. In the Philippines covers the two process, which is the national and the local taxes. The national taxes refers to the national internal revenue taxes imposed and collected by the national government through the Bureau of Internal Revenue, while the local taxes are imposed and collected by the local government. So now with the national taxes. We have the Department of Finance, which is the principal fiscal and the financial administrative arm of the government. It is responsible for the management of the government tax programs. We also have the Bureau of Internal Revenue and the Bureau of Customs, which is under the Department of Finance, who is the agency that directly concerned with the assessment and the collection of the national taxes. So we talk about now the Bureau of Internal Revenue. It has its main function or responsibilities, which is the assessment and collection of all the national internal revenue taxes. It is also enforcement of all the penalties and the fines connected with the execution of the judgments favor in the court tax appeals. It also gives effect and administered supervisory and the police power confirmed with the Tax Reform Act of 1997. Like what I said earlier, the national taxes is imposed and collected by the national government. Let us know first what kind of taxes we must pay to the national government. We have the capital gains tax, which is imposed from the proceeds of sales and exchange located in the Philippines. For example, properties, stocks, pieces of jewelry, or all high-value goods. We also have the documentary stamp tax, which is usually found in a deed of sale or in a bank promissory notes, which is the evidence of acceptance or assignments of transfer obligation. Third is the donor tax. The donor tax is usually a gift for a gratuitous transfer of property between the two persons living at that time. We also have the estate tax to be paid before the estate is being transferred. We also have the income tax, which is all the compensations or income received and earned from a professional practice or conducting a trade business and from properties. And next is the percentage tax, which is the business tax imposed, and it is not covered with the value tax. The value tax is the form of compensation tax and tax making pass into the end of the consumer. And lastly, we have the withholding tax, which is from the salary of the employees. The Department of the Finance says that in every 100 peso contribution through a tax, 60 pesos will be given to the national government, while the 40 pesos will be given to the local government. The national taxes is the local taxes, which is based on the Republic Act 7160, or also known as the Local Government Code of 1991. These taxes and fees are imposed by the local government units in every province, cities, municipalities, and barangays. Also have the administrative structure. Provinces, cities, municipalities are directly headed by the local chief, governors for the provinces, mayors for the cities and municipalities, and each local government has its own legislative council, or also known as the sanggunian, and is composed of the councilors, while the barangays are headed by the chairman. So, for the revenue assignments of the local government, the tax rate is only adjusted up to 10%, and it is once every 5 years. We also have rates that must be legislative through the local council. And for the basis of the real property tax, it is through a schedule of the market values and revision once every 3 years. So, for the internal revenue allotment, it says that 40% of the shares in the national internal revenue taxes is from the government's collections, and allocated according to the type of the local government are the provinces and cities have 23%, while the municipalities have 34%. We also have barangays who has 20% and the hospital who has a 15%. When it comes to the local water district, it also has 10%. Note that the government owned or controlled the 10% corporation engaged in the supplies of the distribution of water and the transmission of electricity in the local government. So for the shares of the provinces, cities, and municipality is based on with the population of 50%, the land area of 25%, the equal sharing of 25%. For the barangays, we also have the 60% population and the 40% equal sharing. Let us know what kind of local taxes we must pay. We have 9 local taxes. The first one is the basic real property, which is the tax on a real properties that classified as the agricultural, commercial, industrial, residential, timberland, and minerals. Second is the franchise tax. It is imposed by the LGUs from a business franchises. We also have the business of printing and publication tax, which is collected from a business that does the printing and publication. Fourth is the professional tax. It is collected from the doctors, lawyers, engineers, and other professionals that engage the practice of profession that requires the government examination for license. And we also have the amusement tax. It is all about the form of entertainment such as the movies, plays, and concerts. The community tax, which is the oldest tax that we have, or also known as the cedula, is required from the individual to pay the 5 peso base and additional 1 peso for every 1,000 income. The annual fixed tax for the delivery tax and ban, it is for the amounting of 500 peso collection of the LGUs that delivers the goods such as beer, soda, or cigarettes. We also have the barangay tax, which is collected from the sari-sari stores or the retailers that the annual gross rates do not exceed to 50,000. And lastly, the barangay clearance. It is paid as a legal permission for a particular individuals to conduct an event or to start a business in a barangay. So we all know that taxation is very important in every government. We can really say that it is a lifeblood that maintains the government programs like educational programs and health programs. It is also one of the oldest responsibility that we must contribute in our country. It was all started with our ancestors, and now we are starting to change some of it, but the main reason or idea why we are collecting taxes are still there with the help of the different laws. For us Filipino, we must enlighten our mind on how the taxation works or where do our money goes by knowing the process or the covers of the taxation we have here in our country. We can properly assess on what taxes we must pay and also on how the national government and the local government share these taxes. We must educate ourselves with the taxes we need to pay, including the laws that we must follow as a Filipino citizen.